Hello, everyone, and welcome to another edition of the Smart Investor Market Update. Okay, stocks were down sharply today with S&P closing at 2089, and as you can see on the chart above you or on your screen, this is a daily chart of the S&P 500, and everyone is wondering, is the market at the top? Are we topping out now? Is the great bull market from 2009 finishing? Well, what's happening is that the market is in a consolidation pattern. This is what we technicians call a consolidation pattern. If I draw a line from here, you see that the market, you could see that this is a triangle. Or if we draw the line like this is also a triangle. So we are in a triangular consolidation pattern in the markets. So the market is not really going up, but it's not really going down either. Now, the rule when we are in these triangular consolidation patterns is that the direction of the breakout, if the market breaks to the downside, we could see increased selling in the markets. If we go to the upside, we will definitely be going and heading to new highs. So that's what we're looking for in the market. So although it seems that the market is very choppy and it's up and down, it's not really doing anything until it breaks out of this consolidation pattern. And I can tell you, a lot of technicians, a lot of big hedge funds, a lot of smart money players are paying attention to this consolidation pattern for clues as to which direction it will break. Now, because the market is in an uptrend, as you can see, we're in a very strong uptrend. Because the market is in an uptrend, what normally happens in an uptrend is the market will break to the upside. Now, that's what happens maybe about 80% of the time, 70-80% of the time. That's what happens. But it's not set in stone, because the market, if I say something happens 70% of the time, that means 30% of the time it will move in the opposite direction. So the market could well and go down, and we have been in a very extended bull run, so this market could very well head to the downside. So if we break down from these levels, we could see some increased selling in the markets. If we close below the 1950 level on the S&P 500, that will be definitely bearish, and we could see even further selling in the markets. Okay, the Dow Jones Industrial Average is a similar situation here, where we see the market is in a consolidation pattern, not really doing much. You can see the triangle not as well defined as the S&P 500, but you can see the triangle there, and we're in this consolidation pattern. And I would say support on S&P 500 around the 1760 area. Right there, you can write that down. Sorry, the 17,600 area. If we do get a close below that 17,600 level, then we could see further selling. And if we get a close below 17,000, the selling will even accelerate further. Remember, the reason why we look on charts and we analyze charts is because it tells us which direction the big money players are heading and what they are doing in the markets. Are they buying or are they selling? It's too often that folks listen to the mainstream media and some of these gurus on television for market direction, and most of the time they are dead wrong. The purpose of looking at these charts is to say what is actually happening, so no one can fool you. So that's why we look at charts. So the Dow Jones Industrial Average is in a triangular consolidation pattern, and as I said, 17,600 and 17,000 are the areas to look out for. Moving on to the Nasdaq. This is a daily chart of the Nasdaq, and the market sold off today and we are not really in a triangular consolidation pattern on the Nasdaq, but we have support down at the 4300 level, and if we close below 4300, we could see selling down to the 4100 level. And if the $4,100 level is breached, then we could see a pretty stiff sell-off in the Nasdaq. Remember, the Nasdaq index is more volatile than, or tends to be more volatile than the S&P 500 or even the Dow. So that will definitely keep an eye out on this market. But for now, market is just pulling back. And as you can see, for the year 2015, the market hasn't really done anything. We opened 2015 at 4,258, and we're now at 4,409. In the S&P 500, we opened the year at the open on the year was 2,058. We're currently at 2,089. So as you see, nothing much is happening. As for those of you who are looking at this chart, not listening to the podcast, we see a broad channeling situation that nothing much is happening in the markets. And what this could signify is that we may have another surge to the upside, and then we hit an exhaustion point in this rally. But then again, as I said, wait until the market shows us the direction. And if you are listening to this podcast, you can go to get the live video market updates. You can go to smartinvestorcentral.com and enter your information, and you will get access to these daily briefings. Moving on to the US dollar. The dollar was down slightly on the day. The market attempted to rally, hit support on the $96 or 96 level, on the dollar index, and we got a slight sell-off in the dollar. Now the dollar topped out in mid-March. The dollar topped out near the $100 level and has backed off since then. Critical support in the dollar is the 94 level on the dollar index. If we close below 94, we could see accelerated selling in the US dollar index. Okay, going overseas to the overseas markets. Yesterday we spoke about the FTSE 100, and we said that if the FTSE does not close above 7,100 on a weekly basis or even a monthly basis, we are up at a point where we could get a triple top in the market. So for you folks in England, you can keep an eye out on that. Critical support is at 6,700. If the market breaches 6,700 here, that would be bearish for the market, and you could see a pretty significant sell-off for the FTSE. Now let's move on to the star of the last couple of months, the German DAX. German DAX since October rallied nearly 50%, and this market is the European markets were up on the morning, and we closed at 11,619. So the support in the DAX is this previous low at 11,331, and resistance is up at the high near 12,390. Now let's take a look at the crude oil market. There has been some interest in the markets, and what we have seen is that the oil market has bounced off the bottom and is slowly, gradually heading to the upside. Technicians like to call this a double bottom, and the market is moving to the upside. There will be resistance at the 75 level if it gets that high, and also at the $70 level in crude oil. And for those of you who are wondering what's happening in the oil market, what normally happens with the market, after a long decline like this, we do get a bounce. The market will bounce, retrace, and we can either recover all the way up, or you get another wave of selling to the downside. So that's what we're looking for in the oil market. The sellers will come in at some point. It's just a matter of how long this bounce lasts. Another market of great interest is the gold market, and we see in gold promising pattern here for the bulls. The pressure on the downside is relieving slightly, and we're setting up for a double bottom. But to confirm this, we need to see a close above 1300. Now, is it a time to go out and buy gold? I would say not yet. You want to see a positive close above 1300 before you even think about going out and buying the gold market. Remember, when you're investing, you don't need to catch the exact bottom of a move. There's a lot of profit to be made in the very middle. This whole pattern will be negated if we close below the 1150 level in gold. 1150. If we close below that, then that will usher in renewed selling in the market, which will not be good. Okay, so remember, these markets can be invested and you can be successful in the markets. You just have to keep your eye out and pay attention to what is going on. And remember, do not be obsessed with making predictions. Let the market lead, and then you follow what the market is doing. So this is Beyond once again, and remember, if you are listening to this podcast, you can go to smartinvestorcentral.com and you will get the video analysis in your email. Thank you very much for listening, and have a very good day.